I think that's the saying how it goes. So I'm going to talk about three things today. The Fed's in a holding pattern, all right? What that means to you. We're going to talk about the new trade deal that the President Trump just made with the UK. And finally, I'm going to talk about an interview Morgan Housel, the author of the book, The Psychology of Money, did on a podcast, YouTube channel called The Diary of a CEO. And let's get to it. Let's get to it. So they say don't fight the Fed, but what if the Fed doesn't know what it's fighting? They are not fighting because they are blindfolded. They're fighting blindfolded. And what does that mean? The Fed doesn't know what to do right now. Interest rates should actually be coming down, but there's a lot of risk with these tariffs. So if they lower interest rates and costs go up, then it can create some financial instability and they may need to raise them again. And the Fed, one of the things that the way that they kind of get the economy and interest rates to work in their favor is by expectation, is by planning things in advance and telling them, hey guys, this is what we're gonna do later and this is what we're gonna do now. So it's not just lowering the rate, it's people expecting what they're gonna do, and that actually lowers the rate. So it says the Fed held rates steady this week. Federal Reserve Chair Jerome Powell, he had a meeting this week. They have a press conference. And before that press conference, is all the Fed governors they meet. They talked about what they're going to do with interest rates this time around. Their rate is around 4.5%. And the reason they kept them steady, they said, is tariffs, Trump, and total uncertainty. They didn't say it just like that, but that's what they meant. We don't know if inflation's going up or jobs are going down, so we're waiting. So we're waiting. These are the words from Jerome Powell. So yes, the people in charge of managing your mortgage rates are currently flying blind, unfortunately. They don't know what's going to happen, so they're just going to wait. The Fed's keeping rates at 4.25 or 4.5. They're seeing risks on both sides, higher inflation on one, and the other one, unemployment, higher unemployment. So what they're in a wait and see. They said it 11 times, wait and see, wait and see. He also said it's not clear what the appropriate response is. They're not raising rates, but they're scared to cut too soon because it might backfire. Trump's tariff tsunami is hitting imports hard. Chinese tariffs are now 145%. But that's not a policy. That's basically a trade embargo. It's cutting down Chinese imports by 35% already, and factories are shutting down and orders are stopping. I've seen interviews of people that they say it's not even worth it to order product because they're not even going to make any money if they order these products. So Powell said these tariffs could raise inflation, slow growth, and raise unemployment all at once. So right now, the Fed said they're going to keep rates steady. They're not going to change them. And how does that affect you? Well, think about it, that they're really not sure what's going on. They're flying blindfolded and they're saying, I can't see what's going to happen, so I'm not going to make any changes and crash this plane. I'm just going to let it continue to fly forward, which is not a good idea, but we'll see how it ends up happening in the next 6 months or so. Let's bring this home. Home buyers, if you're a home buyer, mortgage rates are still high, according to historical, right? How they were before, 3% before, now they're 6.5%. But no sign of them spiking or dropping fast. They're just staying where they're at, guys. Don't wait for the unicorn rate. It's not magical. Plan around today's reality. Try to get locked in. If you're gonna buy a house, that's one of your goals. Buy a home now, get locked in, and then later you can refinance if they drop, and if they go up, you're already locked in with a good rate. Investors, if you're buying investment property, make a plan. Where are the opportunities? Where can you be buying? Take advantage of where we're at right now. And if you're investing in the stock market, there's a lot of volatility right now. I don't like the whole day trading bit, but there may be some opportunities there if you're buying solid companies when they drop. Read a book. I highly recommend what I learned about investing from Darwin. These periods create long-term investment opportunities, not short-term day trading, long-term opportunities. Last one, savers and borrowers. High yield savings accounts are still good. Take advantage of that. Money market accounts. Credit card debt, it's still bad. Nothing's changed, all right? So don't get into any more credit card debt. Coso Capital, what are we doing? We're helping clients get the financing they need, locking in rates. We're investing, right? We're planning our investments, but we're being cautious depending how things go along. We're planning a development project. If rates are crazy, if the market's unstable, we may cut it down. We're gonna maybe build 100 units, but maybe we'll do 50, 25, or none, depending on the situation. We're also watching economic signals, not just Fed pressure. So we're looking to see what's being planned by the president and what the economy, because it's affecting the dollar, it's affecting the US national debt, and it's kind of telling me Should I start considering about investing outside of the United States to diversify a little bit outside of different currencies and get that stability just in case something happens here? You don't want to wait for the Fed to decision to build wealth. You plan through it. Plan through it. So Powell admitted last year's rate cuts were a little late. That was interesting that he said that. This time he's playing it safe. They're not trying to cut too soon or raise too soon. If inflation and unemployment both rise, the Fed will have to pick a side. Let's see what side they end up having to pick. The Fed isn't frozen, actually. They're conflicted. They're conflicted on what to do. So when people are confused, they just don't do anything, which don't fall for that. All right, now I'm going to talk about the US-UK trade deal. US-UK trade deal was just announced. Huge trade deal, the best deal in the world. Frankly, not really. There's really nothing going on there. It's not even a trade deal yet because it hasn't been signed. It's just a framework. It's something of an idea of what's coming. And some of the things that have come out of the framework are that there's a 10% tariff that's just going to stay on there. That Rolls-Royce engines are coming into the US for free because we need them. That UK is buying Boeing jets. That more beef is being sent to the UK tariff-free. But also that more cars from the UK may be entering here with some flexibility in the tariffs. And Ford, GM, and Stellantis, which are US car manufacturers, they don't like that. So right now, it's a really tough time. And just want to highlight a few pieces of data with the UK trade deal. The UK trade deal is really not that big of a trade deal and not that big of an impact because it's one of the smallest, not the smallest trading partner, but it's not one of the biggest fish to catch. So right now we trade with the UK about 15.5 billion. That's our surplus. Compared to China, we have a deficit of 263 billion. And with the EU, we have a deficit of 126 billion. So whenever you see some of those trade deals get done, expect the market to really explode. Expect a lot of positive things happening in the right way for the president. That means that the tariffs are working. If we can get some negotiations where they can balance that trade deficit. So I don't know. We'll see what happens. Could these deals quietly let inflation sneak back in? Yeah, there's a possibility inflation can sneak back in. Well, now we're going to pay a 10% tariff on things that are coming in. Imagine a 10% tariff on everything we were paying for China before, and a 10% tariff on everything we were paying for the EU. So not that the tariffs won't be good in the economy over the long term for the general economy, maybe from geographic areas, right? We need to have certain products being made here in the United States, defense products, private PPE, right? So medical equipment, food. We need certain things to have national security, but just know that some of those things will cost more in the end. It's just, adding and subtraction, because we're gonna get those in from countries that are, instead of getting them from more inexpensive countries, we're gonna pay a fee on top of it, or we're gonna make it here, so they're gonna be pricier. Now, the last thing there is I want to share a little bit of inspiration here and just a little bit about money. Interview Morgan Housel from the author of the Psychology of Money book. If you haven't read that book, highly recommend it. It's a different type of book about money. It's not the natural, old school, oh, this is what you need to invest in, this is what you don't need to do. It actually kind of gives you a mind shift, a paradigm shift. It's a word from Stephen Covey. So I really like books like that. And this is some of the things he said on this interview of the Diary of a CEO, which is also a YouTube channel. Shout out to them. What Morgan Housel taught me about life, money, and not dying on a mountain. So he had a situation, he almost died on a mountain. It was scary, but he decided, so he lived his life really saving a lot of money. And he lived life on a budget. And there was a friend of his, a coworker, that actually was spending a lot of money. They were traveling around the world and they were spending $20,000, $30,000 into debt just to go travel. And he's like, what is this person doing, right? Why would they do that? They don't know the problems they're gonna have in the future because of that, right? And then come to find out, when the guy was 32, he died, he passed away. And in that lesson he learned, it's not about just saving money, because Morgan, the author, he was very frugal, but it's also to make sure that you're living a balanced life and balanced lifestyle. So enjoy life and also make sure you have a solid financial foundation. Number 2 was wealth equals freedom, not flexing. So he said, you want to be rich? Control your time. That Rolex or Lambo might impress the strangers, but true wealth is waking up and doing what you want, No audience needed. And I'm really thankful for that. And I agree with that 100%. The people that you see you driving that Mercedes or that Lamborghini, if you want it, buy it for yourself because you enjoy it, but don't buy it because you want to impress other people, because all they're thinking is, oh, man, how do I do what I need to do so I can drive a Lamborghini? They don't care if you're driving it or whoever is driving it. People don't care about that. Number 3, boring investing wins. Boring investing wins. You don't have to be flashy investor. Own a home, right? That's one. I kind of harp on that as a loan professional. Stash cash, save money, right? Buy index funds. If you don't know about index funds, look it up. Vanguard. Chill, just relax, just enjoy life and let those things accumulate. And that's it. I know people want to sell you a lot of other stuff. I know you can do so many other things. I recommend investing in real estate. That's my thing. But if you don't have time to learn about all that, just do this and you can enjoy life greatly. Then it says compounding is magic, but you just have to be willing to wash paint dry. Ask Warren Buffett or Ronald Reed, the janitor, who quietly stacked $8 million. And Warren Buffett, the compounding that he's done, like 99% of his net worth was built after he was age 60. So I think at age 60, he was worth 2 billion. And now he's 94 and he's worth like over 250 billion, and he's donated so much money away. So compounding takes time, but it works, all right? Number 4, emotions are math. Emotions are greater than math. You're not bad at money. Your brain just doesn't like uncertainty. Avoid comparison traps. Stay calm and know when to unplug. So disconnect to think clearly. Emotions are not good for math and for decision making. Make sure that you're doing things on a clear mind. Number 5, redefine success. It's not about grinding till you're miserable. Align your money with your life so you're not rich and resentful. If you want to feel rich, stop chasing, start choosing. The real flex, peace of mind. All right, take care. Hope you enjoyed that.